There are very few things more invigorating for traders than a monster gap down at the open that has everyone in a panic. The market's going a million miles an hour, and if you blink too long, you're going to miss another huge opportunity. These are the times that we live for as far as adrenaline junkies and traders are concerned. Hey there, John Henry here, SSFTG. I hope your trading has been enormously profitable for you. If this is your first time on the channel, welcome, my friend. Why don't you throw a like on the video and subscribe to the channel? Stay a while, We have new content out every day, and you don't want to miss it. If you aren't familiar with what a gap is, there are a lot of different kinds of them, from candle gaps to swing gaps to full-out previous close to current open day gaps. We have them all covered in a lot of different videos, so make sure to use the search term gap in our video library to find them here on YouTube. This will be one that we're going to be adding to that list, and this is going to be going over the larger end-of-day close to the next day's open gaps. Gaps can be a lot of fun, but they can also be super scary. Where are traders going to be coming in? Are they going to be taking profit, and where? Where are their stops going to be? How are the bulls feeling, or the bears? There are so many questions that hit after a big gap, it can be kind of a whirlwind of confusion. The most important part of figuring out what to do after a gap is to get the context on lock. It might take a few candles to get that job done, or it may only take one, depending on how aggressive of a start it is. Let's take a look at a few big gaps in the market and on actual charts here so we can read through them to kind of understand what the market might have been feeling at the time. So, of course, the one that's been on the screen here is a huge gap to the downside, right? Big gap. And if we zoom out a little bit further, we can see that the market, for the most part, was just going a little bit sideways, started drifting lower right at the end of the day, monster lift into the end, right? So what are we thinking before we open up here? We're thinking that the bears might be feeling like they got a bit screwed, and we have the bulls who are feeling like, holy cow, yeah, let's get this thing going all the way up to the moon. But then we open here. And that's why it's so important to understand what the market was feeling before this. Because if you were looking at this thinking that you were a super pumped up bull and you're hitting all your targets and this thing's going off to the moon and it's covering your kid's college fund, and then you open up and you're negative, right? That's not going to be a good feeling at all. There's going to be an incredible amount of disappointment. And if sellers were selling all the way down here, they had an end of day rally back to their break even, and they open back down here, how do you think they're going to be feeling? Now that's an interesting one, because if we were all the way down in massive profitable territory, then it gave all of it back, and then we open the next day back in massive profitable territory, a lot of traders are probably going to be a bit kind of skittish, a bit sheepish, if you will, like, ooh, wait a minute. The last time we were down here, this thing went screaming all the way back up, and I missed my opportunity to get out last time. I better take a little bit off, right? Where are we opening up? Well, we've got major support right at the previous swing. That's the previous low of day, and the market's trying to close underneath it. We have a very strong bear bar to kick things off, so like I said, it might take a couple candles to figure out what's happening. Now we have the bulls trying to reverse the market back up, and it's beginning to get a bit more clear. Right, so that's the importance of understanding the context of the underlying. Let's look at some other ones. We actually have a really interesting string of a couple days here to go through. Let's take a look at this one first. Big outside gap down. Outside gap referring to the fact that yesterday's low is here and this is opening below that. It is an outside gap. Now with that outside gap, we're opening up 1.5 miles away from anything. And if you want to talk about FOMO, it's when you have a move that's collapsing down, pause for barely anything, collapsing down, and then a monster gap to the downside. Sellers are going to be thinking, holy crap, I'm going to miss this if I don't sell soon. Give me anything that I can get. And they're going to be trying to sell above candles, selling weak bear bars because they know that that might be an inside pullback, etc. And what do we end up getting? Well, the market juked above the high for a second and then collapsed all the way down through the lows. The underlying context would suggest that the sellers are feeling some serious FOMO, but they're still not dumb. They don't want to sell at the bottom. They want to sell at whatever better price they can get at the time. And that's what they did. Now, going directly into the very next day, we can see what actually took place after those bears swept the market all the way down, right? Beautiful drive down, but eventually in the end, it rotated all the way up to a new high. So if the shorts were selling here, right, and we have a situation that had a beautiful drive down, likely 2-to-1 targets are filled, etc., then we come back, they defend the break-even point, goes back down, gets more scalps, and then finally puts them underwater. Well, the first response is, what happens when we get back into this break-even area? The market's immediately closing underneath it, but do we see a sign that maybe these bears start getting out? Are they nervous, or are they going to wait for some kind of structure? I say structure because this is an inside gap. Yesterday with the FOMO, it was an outside gap. With an inside gap, traders have a little bit more structure to work with. They can look back at the previous day and say, okay, well, yeah, we're opening back at this break-even point, but there's nothing here in the market that would suggest that it has to bounce. We had an inside swing high, but we know that that was nothing more than the shorts break-evens retesting. So the fact that we're right here again on top of that break-even point, we're going to need to see a little bit of info. And realistically, we don't have any support structurally until at least down here in the 4280s. And if the market's going to go up, we've got resistance at the settlement fill. And there's really nothing in between there. So the market's going to have to transition for a little while. If the bulls want to come in to buy on this dip, they're going to need to do it in a zone of structure that makes sense. And if the bears are going to want to sell, they're going to need to do it in a zone of structure that makes sense. And we're right in the middle of both of those. So we're going to have to wait until the market gets to an area. And hey, what do you know? When the market finds support down here, they end up bouncing off of it. And hey, what do you know? When the market gets up to a zone of resistance up here, it rejects out of it. Right? Now, we cheated a little bit there, but then we go into the next day with a huge gap again. So let's zoom out here and take a look at what's actually happened here over these last several days. We had this jumbotron outside gap to the downside, which saw FOMO sellers squeeze it to the lows. Then those FOMO sellers taking profit reversed the market up to the highs. The bulls, who realized that that was a really nice buying opportunity, might have caught some higher low action inside of there. And it wasn't until the next day where we found structural support that they were able to buy again. Sellers weren't able to sell again until we made it back up into that gap area. And sell they did. They couldn't even complete the gap. It faded away too quickly. And then we go into the next day where they open up and they filled the gap. They actually completed the job on the next day's gap higher. So with the completion of the gap, now we have a situation that had the earlier sellers, if they were looking to get continuation down, realized very obviously that they're wrong and were given a chance to get out of break even. If bulls realized that they missed the opportunity to get long, they were given a chance to reload on a dip. And if sellers missed that follow-up opportunity to sell off of that area of settlement, they were given another opportunity to sell. So we've left behind another outside gap to the upside. But this outside gap up, again, looking at context, is directly into the objective that the bulls were trying to get on the rally from the day prior. So now that it's completed, do you think they're going to hang out? I mean, if that's what they were looking to complete and they gave up the rest of the afternoon all the way down to possibly even close to break even or negative, depending on where they got in, and now they're at their major target area, chances are we're going to see them take some profit here. The likelihood that price action is clean in this area is not very high. And the only zone of resistance that we really have structurally is a little bit further up, so maybe it tries to juke a bit further, but otherwise it's this big one up here. This is all just kind of choppy, sloppy, gross. As far as support, I mean, what do they have? Like back down here is it. There's nothing else to work with. We go up a little bit. They did end up churning through that high, and now we're kind of chopping back, and now we're going back up again. Now remember, this is a major zone of resistance in the long term. We know that sellers are trying to push back down, and buyers have bought down here. The buyers who bought down on this dip are in a zone of profit, and if they see this kind of stuff where it goes above the highs and fails, they're not going to be hanging out very long. They're going to start jumping ship. They've had to wait through all of this other garbage? No way. So with more perpetual failures above the highs, the more times we see lower high action, it's more likely just sellers selling out of their longs, taking their profit while they're able to up here. And this could even be some of the lower high action that happened in the early morning session too. We do get a little bit of a continuation up. They hit that area and it looks like the bulls just jumped ship and dove all the way down to do what? To fill the next gap. Now that gap is done too. They completed 2 objectives all in one shot. Right, gaps are crazy in all the right ways, and sometimes the wrong ones. I hope this guide helps you in understanding them a bit better. If you have any questions, thoughts, or topics for a new video, make sure to drop them in the comments below. I always love hearing from you all. Thanks for watching, and we'll see you in the next. Thanks. Bye.